Hi guys, so I decided to hop onto the camera to record some content for you guys. So I'm currently in the process of backtesting gold, and I thought why not just record a video where I can showcase how backtesting works, what you should do. So it's going to be beneficial to you, trust me. So now, before I can get to the chart, I just want to give you a brief overview of what you can expect to see from this video. So some of the things that come to mind is you will see how to do top-down analysis, right? You will see how to basically plan positions, how to enter positions. That is how you're going to place an entry, how you're going to place a stop loss, how you're going to place your take profit. And also you're going to learn how to manage a position, right? And there will also be some psychology in this video. So honestly, there's going to be a lot, right? So before or without saying any more, let's just start with the video. So guys, um I'm going to focus on 2020, right? Because I just want to collect some data from 2020 till the current year. So I know it might feel like a lot, but I don't take a lot of trades, guys. I actually don't. So I'm looking for, you know, um, good quality trades, if I can put it that way. So right now, when I use Trading View to basically get to 2020. So 2020 begins, um, yeah. So 2020 begins somewhere around here. As you can see, this is the 23rd of December 2019. So it means we have an extra week coming. So you know what? It's fine. So the first concept that we are going to tackle is top-down analysis. So top-down analysis is basically an approach, right? It's not really a strategy, but it's the way you look at the market. So top-down analysis just means you are analyzing the market from the macro analysis, and by macro I don't mean fundamentals, looking at it from the bigger picture, right? So for myself, the bigger picture will be the weekly time frame. I rarely go beyond the weekly time frame. So yeah, for me the higher time frames is the weekly and daily, and yes, I can include the 4 hour, right? So that's the higher time frames, while the lower time frames, it will be the 1 hour, the 30 minute, and the 15 minute, right? That's the lower time frames for me. So when we say top down analysis, it means you're analyzing starting from the weekly, coming down to the daily, 4 hour, making it all the way to the 30 minute or 15, depending on the situation, right? So now let's apply top down analysis. So now this is what I would normally do on a Saturday. This is when I normally prepare for the next week, right? When I'm looking for trades. Now, when I look at this market, when you come across the weekly time frame, what you're looking for essentially is the direction of the market. Where is the market likely to go within the next week or within the next few weeks, right? We just want to see where's the market going. And so just by looking at the market, we can see that the market is currently bullish. What do I mean? Well, if you look at the market from this point, the market created this high and then it came down to create this low. And so after we created this low, look what happened. We moved away to create this current high, right? So for myself, if if I ignore that for a second, right, from this point to this point, I can confidently say the market is bullish, right? So right away, I know I should be looking for some sort of buys, right? So I'm looking for buys. So that's the first step. The second step is I just like to draw in some structure using some trend lines. So how would I go about drawing structures? Well, let me zoom in a bit so that you can see. So how I draw structures is I connect the highs and the lows of the market. And so if you are a beginner, right, or someone who has at least read or studied the market from someone, you should have been introduced to the concept of higher highs and higher lows. So this is a high in the market, this is a high in the market, this is a high in the market. Yes. So what I'm doing is I'm connecting the highs. This is the highs, right? And likewise, since I connected the highs, I'm also going to connect the lows. As you can see, this is a low point of the market. This is another low point in the market, right? So I'm also gonna connect those two using a trend line. So when I say drawing market structure, you just want to connect the highs and the lows using a trend line. So let's just do that. Trend line. We connect the highs just like that, and then we connect the lows just like this. So right away I can see that this is a familiar channel, right? This is a pattern in the market. It's called an ascending channel. So if you don't know what it is, then well, you have to find out. Because for myself, I treat the Falcon strategy, right? So we utilize market structure, we utilize price action and trend lines and patterns to essentially trade, right? So what you need to know about an ascending channel is it is a selling pattern, right? This is a pattern. And normally, if you come across an ascending channel, we normally like to sell at the third touch, right? So whenever you come across an ascending channel, you just look left. This is the first touch of the trend line. This is the second touch of the trend line. This is the third touch of the trend line. It means on the third touch, we're looking for those sells. So remember, initially I said I'm looking for buys. Well, because of this ascending channel, I know we should prioritize sells, right? Sells are the priority as things stand. So that's enough of the higher time frames. What I'm going to do is, remember, right now I'm zoomed out. I need to focus on the current price in the market. So what I will do is I will zoom in, right, so that I can study this price action in detail. So when I zoom in, guys, this is what I'm seeing, right? So when I zoom in, I can see that we have another channel, right? This is another channel. Can you see? This is another channel. And so this one, well, I'm just gonna call it a descending channel, right? So a descending channel is basically the opposite of an ascending channel. With the ascending channel, we're looking to sell. With the descending channel, we're looking to buy. So right away, I'm gonna switch my bias from selling to buy, but then this is going to be short term, right? It means, can you see, actually let me do this. So a descending channel, as you can see here, we have an impulse. We moved into a correction. It means I'm expecting price to give me the next impulse. That is why I'm looking for buys short term. Remember, guys, this is a short term trade. Our priority, as I said, is we are looking for the sell. Always keep that in mind. So since we are looking for buys, what I'm going to do is I'm going to put an arrow up here, and I'm gonna take a screenshot of this. Let me open Word so that I can basically, so this is what you need to do, by the way. You need to um keep track of your, let me put this to the side. So I'm taking this to another screen. You cannot see it, but it's important. You need to keep track of everything that you do in the market, right? So I'm gonna take a screenshot of this. What happened? Let me take a screenshot of that, and I'm gonna, so I took a screenshot of the bigger picture, so I'm gonna take a screenshot of the main focus for now, right? So I'm also gonna take a screenshot of this. Nice. Okay, I've taken a screenshot of this. So now remember, we now have a bias. Short term, we're looking for buys, so we should try by all means to look for those buy opportunities. So switch to the daily time frame, right? So let's just what's this? Yeah, let's just tidy up these things. Just make sure they are tidy. Yeah, so switching to the daily time frame, you can see that the pattern becomes even more nice. So what am I saying here? Of course, I'm still looking for buys, but then if I'm going to quickly forecast what I'm seeing price being giving me a correction and then moving a bit sideways like this. That's the first move that I'm seeing, and then it does seem like it will continue being corrective like this, and then it continues moving up. Okay, we still continue moving up, and then we continue moving up, and then we continue moving up, but we're coming to the end of the move. I can, yes, so that's how much I'm expecting the price to move. So if you're asking yourself, why am I being so slow, why didn't I just draw one line up there? You know, guys, I like to pay attention to detail, so this just gives me an indication of how the market is going to move, right? So yeah, what I can say is I'm expecting price to give me a correction on the lower time frame. So right away I can see that on the 1 hour and 4 hour I can expect to see a bull flag, which I'm going to take to the upside, right? And so what's interesting is here we have a double top, or rather a potential, let me use the ray line. So yeah, if price moves up, let me use the color white. Let me delete this. Yes, so if actually, let me hide this for a sec. Maybe you won't be able to see. Okay guys, it doesn't want, but I'll just go ahead. So if price moves up, I'm expecting, normally this is where I would expect a double top, right? But I do see price breaking above the double top till it reaches that level, which is my take profit level, right? So I'm going to put this up here. This is going to be the max level. So the max level is just it is just, yes, the maximum that I'm expecting the price to move, right? So right away I'm going to take a screenshot of this. This is the daily time frame. Why? Okay. Yeah, so guys, take those screenshots. Take those screenshots. They're going to help you in the long run. Okay, so we're gonna move over to the 4-hour time frame. Okay guys, so this is where I have to warn you guys. So for myself, this is a paid plan, right? On TradingView, I paid to be able to basically replay price, right? Meaning if you're on the free version of TradingView, then you won't have the ability to replay price on the lower time frames, right? So you have to pay to do what I'm doing. So the free version, you can only replay price on the daily time frame and above, right? On the monthly and the daily. That's it. But in order for you to replay price on the lower time frames, you need to pay. So if you want to do what I'm doing, you're gonna have to pay, unfortunately. Or rather, fortunately, guys, because you have to invest in yourself. Not everything should be free in life, right? You won't appreciate it. Anything that is free, think about it. Mostly it's taken for granted, if I can put it that way. So I'm not complaining. And also because I paid, I use the platform, right? My money can't just go to waste. So and also because I paid, I have the motivation to come and use the platform, right? So yeah, on the 4 hour, does it make sense? Okay, so on the 4 hour, yeah. So if you're asking yourself what's happening, so remember I said this is a buying pattern, right? This is the impulse, this is the correction. I'm anticipating this. So essentially, we are trading this wave, the next impulse, right? I hope you got that. Okay, let me change this to red. I don't like white. Okay, so guys, if the market starts behaving in this manner and it gives me a bull flag, this is a bull flag, then I'm going to take the trade targeting the max level. So let me take a screenshot of this. So if you're wondering what's the importance of these screenshots that I'm taking, well, you just want to track your progress as a trader. I shouldn't be doing that. Yeah, you want to track your progress because remember, we are emotional beings, especially when it comes to money. When it comes to money, we do not want to lose money. That's a normal thing, right? So in trading, you're going to lose money. So just make peace with that fact, right? So if you're going to lose money, please don't lose money just for the sake of losing money, right? If you're going to lose money, then take a lesson from that loss, right? Your money shouldn't go to waste, right? You should understand exactly why you took a loss. Was it because you were greedy? Was it because you were suffering from FOMO? Was it because you didn't follow your plan? Take those screenshots, guys. They're going to become valuable in the long run. Why do I keep on deleting? Okay, let's move over to the 1 hour. Okay, yeah, so on the 1 hour, if I can see something of this nature, then definitely I'm executing. I wasn't supposed to do that, so let me control S. Is it control S? Control Shift S, I think. Yeah. So guys, I just want to bring this here. So can you see all of those screenshots? I'm keeping track of them. Can you see all of these screenshots? They are going to work. You should keep track of your screenshots, guys. Okay, so now that I have, so basically these lines, they are just a guide, right? They are a forecast of what I need to see in order for me to trade. Meaning, if I don't see anything close to this, it doesn't have to be exact, but if I don't see anything close to this, right, then I shouldn't trade. I hope that was understood. Okay, so let's study price in detail. Okay, right away it's the 27th of December. I know I should start executing on the 1st 2020 year. So this is where I should start executing. Remember guys, you should stick to your plan. The purpose of this video is for me to backtest 2020 data. So to take trades in 2019 doesn't make sense. So what I'm going to do is I'm just going to play price till it gets to 2020, and then my internet connection decides to be slow. Okay guys, so I'm going a bit slow because um you might find that we might get some trades as soon as we get to what's this, January the 1st, right? So it's important to prepare, right? Prepare early, right? So yeah, let me play price. Okay, so far I'm not really seeing anything interesting. So I'm aware we have this channel. Yes, I'm aware we have this channel. We broke to the upside. We broke to the upside. It's fine. So far you can see the market is bullish. This is what I want to see. Okay, so remember when I told you guys that you should always be prepared. So I'm seeing a correction here, and I will show you what I mean. Okay, so if this happens to come down, right, to give us the third touch, it means I can take the buy, and that's a big if. So if price just comes down to give me the third touch being this is the first touch, second touch, third touch, I'm looking for the buy, right? So let me zoom in so that you can see. So yeah, moves up with this being the first touch, this being the second touch. On the third touch, I will be looking for candles to form a reversal candlestick pattern. It can be a bullish engulfing, it could be a morning star candlestick pattern, it could be a hammer, it could be any reversal candlestick pattern, so that I can take the trade. So that's the first scenario. Let me so remember we are going for we're going for the trade to go up there. So guys, 19, 19. Let me confess, guys. I'm yet to take a trade where I make 19%. I don't have the psychology to um handle such a position. What I mean is, in order for you to hold a 19% position, you have to endure deep pullbacks, right? So for myself, if I sense that a deep pullback is coming, I normally um exit, right? So normally I don't like to hold through deep pullbacks. If I sense any form of reversal and I sense that it's going to be big, I close and wait for the next trading opportunity to enter, right? So you will see as I demonstrate as the market moves what I mean. So but first, let me take a screenshot of this. Okay, I'm gonna delete this. I'm gonna delete this because I want to take the screenshot. We want proper screenshots, and I don't want that vertical line to distract me. Okay, let's bring back the vertical line. Yeah. Okay, so that's the first scenario. So the second scenario is price can just correct here before moving higher, right? So this would be the second opportunity. So this will be the second opportunity. So if this opportunity presents itself, I'm also gonna take the position. That is why you shouldn't depend solely on one scenario, right? Basically, just forecast as many scenarios as possible, right? So that you do not become surprised when the market starts behaving funny, right? You've forecasted how you want to enter the market, right? You know exactly what you're looking for, right? So the last scenario is one which isn't my favorite. So what can happen is price can just break right away and just go. So this one I'm not even gonna do anything, right? So this one, if price just breaks without giving me any form of correction, I'm happy letting this trade go, right? Because I don't understand how to trade this, and also I'm not gonna trade a trade like this. Actually, maybe I can. Let's see, what's the stop loss? It's 133.7. It's not too bad, and it will be giving me 4.89. Mm, okay, this one, I'm gonna leave it up to you, right? So why am I taking some time to think? Guys, in the past, if you trade a big stop loss, right? For example, 133.7, you'll hear people saying things such as don't trade a big stop loss, this and that. So I feel like I got brainwashed into not trading big stop losses, right? So I'm slowly trying to move away from that mindset, and I want to do my thing. Meaning, if I strongly want to take a position, right, and I like it and I believe in the position, I want to take it. So this is that scenario, right? So yeah, I think I'm gonna take it. I think I'm gonna take it. Notice I say I think, nothing is um but remember this one, I think there's a lower probability I'm going to take it because we have not yet started the year. We're still in 2019, so you know we will just have to see what happens. So remember guys, 2020 is here. Okay, we're close. Oh, I can actually start placing an order. Okay, we're close. Okay, since we're close, I'm going to delete this. Since we're close, I'm going to delete this, and this is where I need to focus, guys. I need to focus. What's the market telling me? Okay, the market tells me price is going to be corrective, and so after this correction, it does move out. So actually, let me do a proper job. So I do see price behaving something like this. Yeah, I do see the market behaving in this nature, and then yeah, it still moves sideways. Okay guys, it's gonna be tedious, it's gonna be tedious, but you get the idea, right? So after this, it still does become bullish, still becomes bullish. So guys, I'm still here, I'm just concentrating, so excuse the silence. So what am I doing? I'm trying to get a feel of the market, right? So I'm just trying to predict in a way how the market is going to move, because what I will do in the past is I will just draw something like this and say the market is gonna move up, but there's no value here. I'm just drawing like lines. But now, if I take my time to basically study how the market might move, I find that I may be able to detect that somewhere around here, perhaps the market will retrace before going up. So that is why I forecast the way that I'm doing, right? So I'm gonna speed it up so that you don't have to wait through this when I edit the video, but this concept is very important for me. But let's continue. Okay, guys, so normally I wouldn't do what I'm doing here, right? The thing is, I take a lot of time to focus my positions, right? So if I were to show you how I actually forecast, it's gonna take a very long time. So I'm trying my best to be quick. This is actually really quick, Normally I take my time, guys, you know, and yeah, someday you will see some of my proper forecast, but for now this will do. Okay, yeah, it seems like price will just move in this manner, and then does seem like we will continue up, and then price is losing momentum. Price is losing momentum. And yes, we have officially lost momentum. I do not expect price to go beyond this level, so this becomes the new max level. Um, Text to the right. Yes, so this becomes the new max level. Okay, so let me explain what I want to do. So can you notice how we have a correction in here? If it happens that um on the 1st of January I can be able to place an order, then I will just place an order like this, and then I will target the top. But then if that fails, it means I will need to go for the bigger one, right? So in order to be safe, I'm gonna take. So do you remember I have done the forecast before? Can you see? This is the forecast. This is the forecast, right? So what I'm doing here is I'm going into detail. That one was just a rough forecast, right? So this is going into much more detail, right? So I'm looking to enter here or out there, but I'm gonna take a screenshot of this one and study price. So this is going to be the before forecast. Um, so guys, always let me take it to the side. So guys, always let me be quick. Okay, so can you see, because I went into detail, I moved the max level from a higher point to a lower point. That's the benefit of studying price in detail, right? So currently there isn't a trade unless if you want to take it on the break, right? And so for me, I'm not really favoring it as much. I would rather wait for a correction. The only time I'm going to place an order is if we don't get that correction, then I will place an entry. But for now, let's just study price and see. Okay guys, so I just want to bring the analysis back. Okay, so let me do something. How do you, it's to the left. Where's that thing? Is it this one? Okay, yes. So I just want to show you guys something real quick. So this is something which you have to do in live markets. So remember, I had many different scenarios. I was looking for the third touch, and I was also looking for a correction before the break. And so currently, yes, so this is also another one. And so currently this one, you can see it's the same, like, where is it? Yeah, this one is this one. Yeah, this one, it's the same, like, here I can't really find it, but can you see, this is another scenario, right? But right now let's focus on this one. So basically, as the market moves, you go and you look for the screenshot which closely resembles what is currently happening to the market. And as you can see, we are currently creating what's this, the third touch, right? As you can see, this is the first touch, this is the second touch, and currently we are creating the third touch. So it means if I can find a bullish candlestick, a bullish candlestick like this, then I will be more than happy to take the trade like this, targeting the high. So I just wanted you guys to see this. But in order for me to do this properly, I need to zoom in so that I don't make any errors, right? So yeah, if I can find a green candlestick, if I can find a green candlestick like this, and so it looks like, yeah, let's turn to red. So it looks like price will move side. So essentially, I've already forecasted this, right? So I'm just looking for a green candlestick to take it long. Let us see what happens. Okay, that candlestick is huge. It's huge, guys. I'm trying to think. Okay, we're gonna wait for a solid close because that one closed with a wick. So no trade as of yet. Okay, no trade. I would rather wait for a correction. If I can get a correction, that would be super. I'm not convinced as yet to buy. Let me go to the 4 hour. Okay, guys, on the 4 hour, we do have an entry. We do have an entry, but on the 4 hour, we do have an entry, but I feel strongly we're gonna have a correction. So I'm gonna wait for that correction. And so, psychology tip number one. So the market has given you an entry, but you want to wait for a correction. It means if it happens that the market moves without you, do not be angry because you had the chance to take the trade, but you decided to wait for something better. So sometimes waiting isn't always the best thing to do, right? And sometimes not waiting isn't always the best thing to do. So you just have to understand that whatever decision you take, you have to live with the consequences of that decision, right? That's psychology tip number one. Okay, so I'm looking for a correction, and right away I can see that the correction is starting to form nicely. So this is the correction that I want. Okay guys, so do you remember how I said price will be moving sideways? Right, so I'm gonna place an order based on that and by the way, this is a risky position, right? This is a very risky position. I will tell you why in a sec. Let me first put this up here. So if I win this trade, I stand a chance of making 12%, but this is risky because we are in the middle of the pattern. If you want success in the forex market, right, you want to trade from the edges of structure, right? Meaning if you are selling, you want to sell from the top as close to the top as possible. And if you are buying, you want to buy from the bottom. So you don't want to find yourself what's this? What happened? Yeah, you don't want to find yourself selling here. I'm not saying always that's the case, but in certain scenarios, it isn't wise to sell in the middle of structure. Can you see? This is the middle of structure, right? So you run the risk of price reversing against you, or in the what's this? What you're looking for is price can just go your way, but most times you're going to get burnt. So I know this is a high risk position. It's a high risk position because who knows, price may just come down before going up. So it would be wise to wait for this move, but I'm not going to wait for that. Studying price action, I can see it clearly. It looks like price will just trickle its way out, right? So I'm not detecting any bearish moves, meaning if they happen, then they happen. You know, you aren't going to win all of your trades. So I've already placed my order, right? So let's see what happens. And also, why did I place my order? Look at what's happening inside of this channel. If we study this price, you can say that this is the impulsive move, this is the corrective move, meaning we can expect the next impulse to take us into the position, right? And also, when you look at these candlesticks, let me zoom in. When you look at these two candlesticks, this is an inside bar candlestick pattern called the bullish harami. And a bullish harami candlestick pattern just tells us that price will be bullish, right? Price will be bullish. So that is why I'm looking at executing the trade. So let's see what's going to happen. And price is ready, by the way. It can basically, it's not ready yet, but you don't know when price will move away. So this is the time to start placing your orders, right? So the basically what I'm saying is price can just move slowly till it takes me in. But because we've seen in the market, you're waiting only for the market to shoot up while you're still waiting. So that is why I've placed my order. Okay. Yep. So we aren't tagged in as of yet, right? So I've just placed an order. It's a buy stop, right? It means it's not a market execution. So you should know your orders, how they behave, right? So yeah. Okay, yeah, guys, everything still looks good. Okay, so do you remember how I told you that it looks like price will be slow to get to the order? Well, this is what I was talking about. Okay, so now we've been tagged into the position, right? It means we are now in the market. So what I do is I take a screenshot of this. So we have to journal now. We have to journal the trade. My internet connection is slow. Can you see? It's stuck. There's not much I can do about this. Finally, so I'm going to put this here. Okay, so this is my before screenshot, right? This is my before. Let me find something. I need to find my, yeah, my trade. So this is a template. This is where I this is what I use to journal my trade. So I'm going to copy this because this is my master one. Okay, so the day, let's see, what day was it? It is Thursday, the 2nd of January. So we're gonna go Thursday, the 2nd of January 2020. The time, it is, what time was it? It is 1 p.m. So 1 p.m. The instrument is gold, XAU USD. Position, it is a long. Stop loss is 42.17. So 42.17. So 42.17 just means 42 pips to round it off. Can you see 4217? You just take the comma in front, so it gives you a stop loss of 42.17. Can you see down there? 4217. Yep. And what else? Okay, risking 1% as always. Lots, so lots, it's not really important, but you can put whatever you like. It depends on your capital, on your balance. So I'm just gonna use 0.10. So if we multiply 0.10 by 42.17, it means we should be losing $42. If this trade hits our stop, we should lose $42 because that's 0.10 just means $1 per pip. So 1 times 42.17 means we will lose $42. So result, we don't know yet. The ROI, we don't know yet because we don't know the outcome of the trade. Strategy. So I'm gonna say bull flag. Bull flag. Why am I saying it's a bull flag? So remember, we are trading this bigger bull flag, and we also entered using this bigger bull flag, but also we also entered using this smaller bull flag. So we can just say the entry is bull flag. So if you are confused, right? On the daily, this is a bull flag. Remember, this is a bull flag. This bigger piece is also a bull flag. This smaller piece is also a bull flag. So we are using the bull flag entry technique, right? So trade analysis. The price printed a higher time frame ascending channel. On the dead touch, the price printed a bull flag, which is that right? Which tells me short term we can expect the market to be bullish. Thus, I am looking to capitalize on the short term buys. So you can go into as much detail into it, but I'm not going to do that. So mental state. So the mental state is basically you writing how you feel, right? Your thoughts. Are you good? Are you in a good space? So for myself right now, my mental state, I'm good. I am very calm, but I am a bit nervous. I'm a bit nervous because I don't feel comfortable. How do you write comfortable? I don't feel comfortable recording or back testing while making a video for the public. So in a way it is affecting my overall concentration levels. maybe actually it is the fear of being judged. Hey, spelling, my people. How do you even write judged? Guys, let's just pretend for today only. This is how you spell judged. I think there's G. Hey, guys, how do you spell judged? Okay, today only. This is how we spell judged. It's the fear of being judged, but it's fine. It's the fear of being judged, so I may not execute as as good as I know I as good as I know I can, but I but I will be fine. I will be fine. So yes, guys, as I'm recording this video, right, I'm a bit nervous because you know a lot of you are going to be watching this, right? So you know maybe my stop loss will get hit, or I might say something which doesn't necessarily maybe a lot of things are going through my mind, right? So it may affect the way I perform, right? So you know but um I'm continuing, right? I cannot back out now. I've already started this video, right? So yeah, understand that is why it's so long, but yeah, continue. So that's the mental state. So on the mental state, guys, you just write how you're feeling. So normally I wouldn't be writing all of this, but today, for the purpose of this video, I'm nervous. I'm nervous because I'm trading, and yeah, the key thing here is nervous, and it might affect my performance. Actually, it is, because this isn't how I normally trade. And when I say this isn't how I normally trade, I mean I like to take my time. So now I'm actually rushing. I'm not um giving the trade as much attention as I would love to, because guys, trust me, it can be super long. I already know it's long as it is, but if I were to take my true time, it would be extremely long, right? So yeah, just wanted to point that out to you. So now that we've been tagged in, yeah, is there anything else? Okay, so I also have a caution area. So it isn't here yet, but I also have a caution area. So on the caution area, what happens is, if I have a fear that price may come down to hit my stop, if I'm tagged in, this is where I would make a note of that, right? I would just say, I will do something like this and make a note of it. I would go, this is a good trade, but I have a feeling the price may move to hit my stop loss. But then again, this trade looks good. This trade looks good as it is. So I do not mind if price does hit my stop. I do not mind if price does hit my stop, because equally it may fly. It may fly without hitting my stop. So guys, so this is another way that you should think, right? So in this instance, sometimes it can happen that you're unsure about something. So for myself, not this particular trade, sometimes I do feel like even though price can continue, I somehow feel like price will come down to hit my stop. So if I make a note of this, it means if I see, let's say, over a series of, let's say, in the first quarter, right? Let's say I took 10 of these positions where I had the fear that price will come down. If I find that 9 of those trades actually hit my stop, then that's a good indication that I should stop trading trades where I feel like price will hit my stop. I hope that makes sense. But for this particular trade, I'm not detecting any price coming down to hit my stop. Even if it does happen, there's a very low probability it happens. Yes, so if it does hit my stop, then just understand that it's the market just being the market. You aren't going to win each and every trade. But let's continue. Okay, so far so good, but guys, I I wouldn't encourage you to be happy when you see price impulsing away from your entry with such heavy momentum. So whenever you have such strong momentum in the market, it's usually followed by some sort of pullback. So for myself, if the market's going to move, I need it to move in an organized manner. Can you see? This is manageable. Can you see? If price moves like this, then great. You know, the likelihood of price coming down is greatly minimized. So that's something to also be aware of. But let's continue. So after seeing this push up, what am I expecting? So I'm expecting some sort of correction here, some sort of two touch correction before moving up. Before moving up. So this is where I will take my scaling, but because um the market has not given me permission yet to lock in profits, right? Remember, I'm still exposed. I haven't moved my stop loss to break even. I first need to get granted permission to do so, right? So for now, I'm just gonna wait for that permission before I can start entertaining any scalings. And so the reason I don't just lock in profits, um, the reason I don't move to break even right away is I've been in instances where price does this and then it continues. So what happens is I was tagged out of the position early, right? So I've seen that it's best to not move to break even right away. Okay, now I will move the trade to break even. So if you asking yourself why am I moving it to break even, I will explain. Okay, so we broke this level. We broke this level, right, with the first candlestick. And then on the second one, we also broke this level, right? And this candle is it's a bit impulsive, right? So it shows me that there's a lot of buying momentum. So if price decides to break below here, then we are more likely to lose this trade than to win it. So that is why. But another thing that I'm seeing is I'm seeing this correction coming into the market. So if this correction presents itself to me, then I would look for the scaling. And if you've been paying attention, you can see that this is very familiar. So still targeting the very top. Yes, so I'm still targeting the very top. So this is familiar to this one, because what happens, two touches, we didn't get the perfect dead touch, we move away, we get that correction, and we broke, right? So we came down, come down, we get that correction, and we go. So that's what I'm looking for. When I take a screenshot of this, and yeah, take those screenshots, guys. I cannot stress this enough. So your screenshot is gonna come here. This is your, yeah, so I took the screenshot. Let us play price and see what's going to happen. Okay, I don't know what's happening there. Okay, nice. So let us study price. Okay, so this is a sign that I should be worried. So what am I seeing? Okay, so intuition tells me that we are coming down, but that's intuition, right? You don't want to base your trading decision based off of intuition, right? So price action tells me that we will just retrace up here. So I'm gonna play price and see what happens. So as you can see, intuition was a bet right, but we closed with a wick, so the job is not done. Okay, there's nothing yet, but I do sense, remember that correction I was telling you about? I sense it is about to come, which means this will be the bottom of the correction. So here I need to expect that correction to come. And as you can see, the correction didn't come. Price is moving very strongly. So what I'm going to do is, when I study price, okay, it looks like we're gonna have a correction, and so small movement up. Okay guys, so I'm gonna delete the last forecast. So can you see this one is no longer relevant because we didn't get that correction. So I'm gonna delete this and I'm gonna add the current one. So can you see guys, if we don't get our entry or something close to our entry, it means we do not trade. Can you see? So we'll only enter the trade if we get something like this. So take your screenshot and put it here, and always remember, you must always reference, reference the trade that you're about to take with the with the forecast. Yes, and even here we didn't have the entry, but if you go to the 30 minutes, you probably can get an entry, but it's risky. It's risky for myself. I do see price coming down deep, so I don't know what would happen. So I'm not going to entertain this. And as you can see, price is moving strongly in our favor. So if you are wondering why am I still at break even, well, I was still focused on price. So can you see how corrective the price is? Well, this normally indicates that we're going to have a deep pullback, right? So you should be on the lookout for that. So what I'm going to do is play price. So yeah, that correction I was telling you about, it looks like it is coming. Okay, so do you remember how I said whenever you have this corrective price, it's a sign that we're coming down deep? Well, price tried, and so now it looks like it's failing. So this looks like a resistance level. This looks like a resistance level. So we will just see. Okay guys, I need to lock in a bit more profit. Okay, we didn't get a second opportunity, but we did get a winning trade. Can you see? So we got 12% out of this position. So overall it was a nice position. You know, but unfortunately um there weren't a lot of what's this a lot of lessons, unfortunately. You know, this trade was straightforward, you know. And the reason for that is because, you know, I didn't go into as much detail as I would love to because of time. But then I hope you took value from this what's this from this video. So that is how you plan your trades. Oh, actually, let me take a screenshot of this. Where do I put this? Yeah, I need to put it here. So I also need to grab the other screenshot. What happened to the other one? Trade channel. Did I lose it? Oh, apologies. So I thought I lost the other analyst. So I just want to break down. What's this? This was the before. Let me take it to the end. And then let me go home. Let me take it to the end. Let me take it to the end. Okay, so guys, what we're going to do a quick recap. We're gonna do a quick recap, right? So let's start off on the daily time frame. So guys, I just want to apologize. You know, I could have done extremely better in explaining some of these concepts, right? But This is the first time I'm actually doing this back testing um for the public. So, you know, I didn't expect it to be the way that it is. Somehow I feel like I could have done better. I could have explained things a bit more better, but I don't know. I'll see how you guys respond from the what's this? Yeah, I will see from the comments how you guys respond. That's if you're going to comment. But yeah, let's start off. Let's recap. So remember when I started the video, I did some top-down analysis and I was initially looking for the sell, right? But after studying the current market, actually let me show you the screenshots. Let me show you the screenshots. So this is the weekly time frame. So here I should have shown you the sell. So yeah, this is where it should have been long, but yeah, here I was looking for the sell, but then I discovered that we may get the buy, right? So this is where I switched from the sell to the buy because of this bull flag. And so this is the how can I put it? Let me do this. Yes, so can you see this one? This is the analysis. So I was expecting price to get to the max level before dropping, as you can see here. What time frame is this? Okay, this is the daily time frame. This is that's the weekly. Yeah, this is the daily time frame. Okay, I can't really zoom in. Can't really zoom in. So can you see how I was specific? I said I'm looking for a correction, some sort of bull flag before I can go long. And as you can see, it's not really clear on the daily time frame, but we do have that correction. So yeah, this is what I was looking for. This is what we got. So um it's good. Let's move over to what's the next time frame. The next time frame is the 4 hour. So this is how the 4 hour was supposed to look. Let's see what the market gave us. Oh, I can't really zoom out. So yeah, guys, so this is what I was looking for. This correction, this bull flag before going long, and indeed we did get the bull flag to go long. And so I was looking for different scenarios. This is the 1 hour. Let's go to the 1 hour. So as you can see, guys, um as you can see, it's pretty much the same thing. Okay, so yeah, this is the different scenario. So do you remember I forecast a different scenario? So this was the first scenario. I was looking for the third touch. We did get the third touch. We moved away. So the reason I did not take the entry from the third touch is because the candlesticks weren't giving me enough confidence to take. So I could sense that a correction was coming. So instead, I waited for the correction. And if you look at the screenshots, I was prepared, guys. I forecasted many different scenarios. So this one, there was also this one, and so that's the before, and that's the yeah, this is another scenario. So the another scenario was for me to catch this trade from the break. So you can say that this one is similar to this one because we are waiting for that tight correction inside of the correction. So this is me entering the trade before, and this is the forecast. I was looking for a trade in here. I couldn't find it. So probably if I was really focused, right, I could have maybe gotten some. So there's a method which I use to enter trades where the structure isn't clear, but you know as I said, guys, I'm not really used to like recording So it's maybe in future will improve. So yeah, there's that, and then yeah, this is the after. But overall, you can see that this was a straightforward trade, right? I hope so. And yeah, I just hope you understood what happened, right? And also I gave you some psychology. Remember how I told you that if you are going to wait for the correction, it might not come. You may see price flying away without you. So if that happens, you just have to live with it, right? Accept it. Do not be sad or angry that you missed a position. No, you took a decision to wait, right? And so I also showed you that sometimes waiting is not a good idea. Sometimes waiting is a good idea, right? So this is the way you're supposed to think when you are trading, right? So is there anything else I can think of? No. I would love to continue with more, what's this, with more trades, but it's too long, guys. I will try and do better next time. But um if you're going to extract value from this video, right? So most of the things which I've just explained to you, top down analysis, how to enter. Can you see I showed you how I will be entering the trade? Can you see how I placed my stop? There's a reason I placed it the way it is, right? So if you apply this method to your trades, you're going to be good, guys. So see you in the next one.